supplier.
Table supply.
Mm. Therefore, they can reduce their VAT obligation.
Avoidance.
So let's move to the second one. We've been told the following is an income statement from ABC, a trader, this is a partnership. So the two-state partnership, which they are all the same. So whether it is a partnership or the other one, the approach is the same. For the year ended at 1st December 2024, where the partners Habdi Baraka share the profit and loss in the ratio, that one respectively. So we have the sales, foreign exchange gain, interest income from the bank deposit gross, profit from the sales of motor vehicle, input tax refund, royalties from the patents, insurance compensation. You have the purchases, purchase of furniture, legal fee, rent, donation to of blind school, depreciation salaries, purchase of motor vehicle, computers, motor vehicle expense, general expense, tax consultancy fee, general provision of bad debt. So you know the taxation of bad debt. We don't take general provision for bad debt is not allowable for tax purpose, but the specific bad debt
Mhm.
is allowed for tax purpose. Debt commission to Abdi, drawings, goods by Baraka. Now, for the partnership, any expenses which you are paying to partner is a tax, is non-allowable, or you cannot claim it to reduce your tax.
Okay, okay,
Yes.
okay.
Now, so let's have a structure of taxation of a business income. To me, what is we? So we isn't ABC trade as a partnership. Say taxation of taxation of income for the year ended that first, I think it is December 2024. So the best approach, it depends with the examiner. So if examiner give you
Mhm.
net profit, so you take that net profit, then
Mhm.
you add back disallowable expenses.
Disallowable expenses.
Yes, disallowable expenses. And then you less allowable expenses, and also part of the other specific income. And then once you get that, you add other source of incomes, and then so that you arrive at adjusted taxable profit, adjusted taxable profit. So this is approach, unless he has given you another approach, which will start by starting with the net profit, sales, cost of sales, less expenses, you arrive at this one. So that is one approach. It depends with the examiner. Another approach will be sales, and then less cost of sales, and then you less allowable expenses only. Allowable expenses. So that is another approach. It depends with the nature of the question that examiner has given you. Wengine, they say it start from the sales, then you will use this approach. If they are silent, start with this. So So we
Untitled.
need now to see statement of adjusted taxable profit for that year. So we will pick from the net profit. Let's start with this. So what is our, in this case, it is a net loss. So
Mhm.
we're having a net loss of for 90,
We have
for
a net loss.
90,000.
Yeah.
Then we'll add back disallowable expenses. So let's see the breakdown of the legal fee of 300,000 here. This is the
Let me
breakdown.
ask.
Yes.
Let me ask. What do you mean by how do I identify allowable and disallowable?
Now, allowable,
Mm.
disallowable, these are expenses which are not relating to the business not relating to the income you generate from the business.
Allowable.
Not disallowable.
Okay,
So
okay.
it is an expense, yes, but it is not relating directly to the generation of a business income.
Okay, okay. Let's go. And allowable?
Allowable now is an expense which attribute directly to generation of a business income. So we have the legal fee. You will be like determining each and every transaction to see whether is it relating to the generation of a business income. So if you see the
Mm-hmm.
legal fee, the cumulative value is 300,000, but there is a breakdown here. So the first breakdown is a negotiation for fee for bank loan.
Mm-hmm.
You are taking loan to finance the business, so which means this is allowable
Yes. Allowable
expense. Tax appeal
appeal.
expense. This is disallowed. Any tax, regardless whether it is pay, whether it is VAT, any tax is
It's
not an
disallowed.
expense, yes, to generate a business income. So we disallow that. So we'll add back 15,000. Debt collection cost, yes, this is we are collecting the customers owing. So that is allowable. Convey and V for parcel of land. Convey and V also is part of the tax fees for the land.
Mm.
So
So
also,
disallowable.
yes, we disallow that. Defending the farm case, defending the farm case against breach of contract. So the
Answer
contract,
that
maybe it was the contract for business.
one.
So that one we allow. Court
It's allowable.
find. Yes,
It's allowable, defending the firm against breach of
yes,
contract.
it
Okay.
is allowable. If it was a business, like you say, this
Mm.
examiner is silent.
Mm-hmm, mm-hmm.
Yes, maybe this is a business contract.
It's a business contract.
Because we have not been told the nature of the business, but we assume this is a business contract. So if it
Mm-hmm.
was for directors, then we could have disallowed, but it is for business.
Okay, okay, okay,
Now,
okay.
court find is in my penalties and all that. 9,200. Registration of a patent. Patent is something that give you rights to use your product. So
Yes,
patent is
it's
allowable. So we are done with note number one of the legal fee. Now we go note number two. Rent and rates include
so
a, yes,
how do we treat them, like the allowable and disallowable? Do we treat the disallowable as debits? Ama we treat them as
you
credits?
said.
Or in our statement,
Uh-huh.
how do we treat the disallowable? Do we treat them as credits? Do we subtract them from?
No, you see,
Mm,
we are not taking it in the perspective of a debit or credit, but
mhm,
these expenses, they have
mhm.
been subtracted for them to arrive at the net loss of 490, they have subtracted these
They were subject to that expense.
these
Okay.
expenses, yes. But
Mhm.
these expenses are not you are not but that by the tax laws you are not allowed to subtract this one as an expense.
Mhm.
Yes. So remember here we are comparing two things. We have accounting profit
Mhm.
and the tax
Tax profit.
and the tax profit. Yes. So remember, this is a totally different, and also this one is a different. Accounting profit, you are allowed to claim or to subtract all the expenses, regardless. But
Okay.
here, you are only allowed to claim allowable expense.
Allowable expense.
Yes, allowable expenses in for you to arrive at tax profit and accounting profit. So now
Mhm.
we are trying to rectify the accounting profit so that we arrive at
Tax profit.
tax profit by adding back expenses which it is not allowed. For example, like depreciation. So you find that in accounting, most companies they say maybe we charge 25% of the depreciation on a reducing basis.
On basis.
Another company will say I charge 30%. So that is your accounting perspective. But when it comes to the tax profit, we say no. For the allowance, for depreciation, we provide you with a specific rate, 10%. It cut across all the business. So we will disallow that depreciation of yours and we give you the one with a standard rate. With
Standard
a
rate.
standard trade, yes. So we will add back whatever you claim and we less what you're supposed to claim. So,
Okay. Okay.
so in short, we are adjusting this profit.
Okay. Okay. I think nimekupata. I think nimekupata. Okay, we can continue. Can continue.
Okay. Now
Adi
let's
just
go
adi.
to not number 2. Rent and rates, accrued rates for that one. So rates, this is accrual. Accrual is expense for the year, but they have not yet been paid. So rate
Yes.
are allowable expenses. Yes. So this one, it has an accrual of 40,000. So it will not affect anything. Now we go to number 3, general expenses, which is this one. The accountant has subtracted 260. But with this 260, there's some element which are not allowable expense. So let's see. Number 1, interest on Shylock loan. Whether it is a Shylock or any other loan, so long as you are financing the business, then that one is
Allow.
allowable. Partners entertainment allowance. This is partners entertainment allowance, not the business entertainment
Allowance.
allowance. Yes, so this is for partners expenses, which we disallow. That is 30,000. Medical expense incurred by the calipia. So any expenditure you paid for to partner, we disallow.
Allow.
We disallow any expenditure unless the partner is but unless the partner he cannot be unless it is a whole-time director, then we might take it as an allowable. But if it is not a whole-time director, we have not been told. So any expense you pay to partnership, you disallow 24,000. Now, purchases of a computer. Computer, yes, but they have subtracted 20,000 as an expense in their P&L, but is a computer expense?
Yes.
Is a computer expense. Ulifanya financial accounting wapi? Tutaifunga huyo mwalimu sasa.
Not an expense.
Yes?
Can
Computer is an asset, eh?
Asset.
Yes. So if you buy an asset, what could be the journal entry for an asset? You debit the asset account and then you credit the cash, which we have you, the cash or
Yeah.
bank, right? But this accountant has done opposite. Yes, he has credited the cash account
And debited
and instead I debit profit and loss. Profit and
P&L.
loss, P&L, which is wrong. You could have debit an asset. So this one is not an expense, but it is an asset. So we'll add back that, but you will claim a capital allowance. The capital allowance for computer software, it is classified under class 2. Previously, previous note from 2024 November backward, we were having a special treatment of a computer software where we were charging 20%. But with the effective from for 1st November 2024, this one was classified under class 2, where we charge 25% as a capital allowance. So we will add back here and subtract 25%. So say purchase of a computer, that is 20,000. And then, yeah, so we are done with that. Let's go to number 4. Motor vehicle purchased during the year were partially used for the private purpose by Baraka. So we said any expenditure incurred by the partner is disallowed.
Allowed.
So motor vehicle purchased during the year was partially used by Baraka with estimated private usage. 40% was the usage. So where is the motor vehicle purchase? So which mean the motor vehicle purchase, we have a motor vehicle expense.
Motor vehicle expense.
Yes, motor vehicle expense. So which means this expense, 40% is relating to Baraka expenditure. So which you will take the motor vehicle expense here and then it is allow 40% of this.
Times 40%. Times 0.4.
Yeah, times 40%.
Okay.
Good. Purchase of goods. Purchases of goods are all inclusive of VAT. We said all the taxes, regardless of taxes, that it is not tax. Not
It's
tax.
disallowed.
Yes, it is disallowed. Even these one purchases are inclusive of the VAT. Even if you have prepared the P&L, you realize if you raise an invoice with inclusive tax, if you go to the P&L profit and loss, you will not find the VAT, but you will find the net amount.
Yes.
The accounting software, they are good in that. But if you don't have accounting software, then you have to separate these ones. So we will take the purchases, which is 1044. We remove that 16%. So we'll say the purchases, these are purchases. So let's look for that 16%. I will take 16, divide by 1/16, multiply by 1044. 1044, yeah. So that is the element of VAT. So we are done with the additional information. Let's see other expenses which they have subtracted here.
But where are you getting your 1044? I'm not seeing.
See, this is a total purchases, eh?
Okay.
So these total purchases, as an element, they have already included VAT of 16%.
16%.
Yes, so we'll say if 1044,000 is equivalent to 116, that is the tax VAT inclusive. What about that 16% we are looking for? What about 16%? 16%. Or you can get the net. Thereafter, you calculate that 16% and disallow, which you will get the same value. But why go the long way and you can use one formula and get that.
So we get the total sum of disallowable. We subtract it from
We add back. We are not
We add it back
subtract.
to the we add it back to the net loss.
Yes.
Okay. Hmm.
But we have not exhausted, so we have just done with additional information.
Mm.
We have to go back again and question all these expenses. Number one. Number two, purchase of a furniture. Furniture is not an expense. It is an asset.
Yeah. Asset.
So you could have debit the furniture account instead of debiting the profit and loss. So we disallow the entire 240,000. Legal fee, we have seen that. Donation to School of Blind. Yeah, it is a charitable school, but again, angetuambia
Disallowable.
registered. But anyway, so we'll assume it is a registered, yes.
We just assume it's donations are
Yeah,
allowable.
donation are allowable if it is not for the political parties.
Okay.
Yes, so
Okay.
if you are contributing to political parties, then that one we disallow. But if it is for the charitable organization like School of Blind and the schools, then you allow. But also there and also the NGOs. But there must be registered. So this examiner hajatuambia registered, so we assume it is a registered. Now, depreciation, we disallow depreciation because we don't know which rate he has applied because we have a standard rate for the depreciation. That is capital allowance. So we disallow the entire 284,000.
And if we are given the rate,
If you have been given the rate, then unless you will have to calculate for the specific rate, examiner will not give you the rate. You'll have to remember the rate. If you check your first page here, you have been given all the rate for the capital allowance. 50, 50, 10, 25, all that have been given here. Kuna zingine you will not get it here. So you have to remember. So,
okay.
and then to go to depreciation salaries is okay. Purchase of a motor vehicle. The motor vehicle also is a capital in nature. It's not allowable, 720,000. And then purchase of a computer. Yes, even computer also is a capital in nature. That is 450,000. Motor vehicle, we have done with that. Tax consultancy fee. So if they could have said consultancy fee, then we could have assumed it is relating to the business. But now they say tax consultancy fee. So the word tax there, yes, we disallow. Now, general bad debt, we disallow. We say it, you only allow the specific bad debt. The reason why you disallow the general bad debt is that, remember, you are reducing your tax liability. So if you say we had 20,000 customers who did not pay, you don't know who is this customer. Then, so the KRA cannot be able to recover this amount. This amount, yes. But if you say customer K was not be able to pay us, then they can say, yes, well, write it off here, but give us that power. We are going to collect that amount from them. That's why they are allowing the specific bad debt.
Okay.
Yes, because they can recover from that. But general is disallowed. Then we have a commission here to Abdi. Yeah. So commission to Abdi, we have 36,000. We also have a drawings of Barak. That is 100,000.
100, umeandika 10. Okay.
Yeah, it is 100,000. So now we have done with all allowable expense. Yeah, disallowable expense, sorry.
Yes.
Disallowable expense. So now with this, we have some which you can't claim. For example, purchase of motor vehicle, furniture. We have this. We have this. We have computer. There was also a software purchase of a computer, so
It's our computer software.
purchase of a computer software. So all
Mm-hmm.
these are allowable. They have, we say, less allowable expenses. Now, this one, we claim what is called
Capital allowance.
capital allowance. So this, the capital allowance, this one, we are charging 25% because they are in class 2. So we'll multiply by 25%. This one, furniture, class 1, which I will charge 10%. So some of it examiner has given you. If we go back here, yes, you've been told where is 10% here. Furniture and fitting, 10% per year on a straight line
Yes, yes.
on a straight line basis. So pick that 10% here. And then motor vehicle class 2, add moving machine. Motor vehicle and AV add moving machine, 25%.
And
25%. Good. The computer also 25%, class 2, all the peripheral and the computer devices is 25%. Here, amekupea. Where is it? It is here. So if you go through this list, you will find them. Yeah. So you could see this is the capital allowance they could have charged as a depreciation, but accountants already claim even the less amount. That's where now the deferred tax and the deferred tax liability and asset come in. If you do those two things, because different between accounting expense and the tax expense. That's why you find that in most companies you have deferred tax liability, deferred tax asset. So, do we have any other expense which we need to? They have subtracted already. They have subtracted these is which they are allowable, like salaries. The ones which are allowable, they have already subtracted. So
they
we
were
will
just
not going to subtract again. Then tutaifanya double. But if you were starting with this, then to me pick only the allowable. So now let's check the revenue, the income also, which there's some income which we need to subtract here and add as a specific. Let's check foreign exchange gain. Yes, foreign exchange gain is 180.
Okay.
Even though this
That's
examiner, yes,
is it allowable or disallowable? The exchange gain. Foreign exchange gain.
like this examiner is more open. So he's giving you a chance to go with your assumption.
Mm-hmm.
Foreign exchange gain realized is allowable, unrealized
Allowable.
is not allowable. So if you leave, then examiner will know that you assume it as if it is realized. So we will leave that one. Interest from the deposits. This is a specified source of income. So
Yes.
you will take that, subtract here as a specified source of income, but we will add back. There is no effect, but we are just separating the business income and other source of income.
Mm-hmm.
So we will subtract the same value. We subtract here and we will also add back the same value. So there is no effect, but we just separating. Profit from sales of motor vehicle, yes, that is for business.
That,
Input
mhm.
tax refund. Tax refund is not an
That's
income.
yes. That an
Yes,
income.
so they have already added. So we will subtract here. That is 360,000. Royalties from patent. Patent also is a specified source. Maybe they have leased their patent to other traders. like Safaricom. Most of the business they use Safaricom franchise use of it. So we subtract that one. Insurance compensation, that is okay. Now, and now let's add back other specified
Income.
source of income,
That's of
which will
income.
be this
The interest income
and the
and
patent.
yes.
Yes, these and the interest and the patent. So once we have this, you can be able now to get our adjusted profit. So I will get the total of all this. Get to the total of this. So if they say gross, it means they have not paid with the withholding. We have not even been told the withholding side. So it will not have the
Just use
effect.
it the way it is. Okay.
Yes?
We just use the amount the way it is.
Yeah, it is gross. So we use the gross, but we will not subtract the withholding because we have not been told they have already paid the withholding.
Okay.
So check these. Sorry. For 90 plus 2 million minus 1 million plus 390. So this is adjusted taxable income.
Just scroll down on your Excel. Okay, okay. So just set up for income is that. I need to get 25. Okay. So I have to start with, if I do get this question, ideally, I start with additional notes going up, additional information going up.
Yes.
Okay. Yeah. I have to identify disallowable, allowable, and that's the silver makeup. Okay. 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 Let me check that. A schedule of allocation of taxable income. Payment and the filing of tax. So is this the same as the schedule?
Which one?
The next one, a schedule of allocation of taxable income
No,
to
you
the
see,
business.
this one now is
Mm-hmm.
is if it was a normal business, which is not a
Mm-hmm.
partnership business, then we could have taken 30% of this. But
If
now
it was a
it is
normal business, if it
if it
was
was a
not a
normal
partnership.
business, come on, like and it's not a partnership business. Remember, we have different types of business.
Yes, yes,
So
yes.
we could have taken 30% of this and then that is it.
Okay.
But now these are partnership.